Hello, I'm Alex Davies, founder of Wealth Club. Today, we're discussing venture capital trusts, what they do for individual investors, small businesses, and the UK economy. Venture capital trusts, VCTs for short, are investment companies listed on the London Stock Exchange. They've been around since 1995 and provide a way for experienced investors to get exposure to a portfolio of young, often privately owned companies that meet the VCT criteria set out by the government. Because these smaller businesses are higher risk, VCTs come with tax benefits such as up to 30% income tax relief and tax-free dividends. On the back of raising more than £1 billion from investors in their last tax year, VCTs are now facing a far more challenging economic environment. Can VCTs continue to build on their recent successes? How will today's economic headwinds affect the small businesses VCTs invest in? And what does the future have in store for VCTs? Joining us today to discuss this are three respected and long-standing VCT managers. Will Fraser-Allen, Managing Partner of Albion Capital, Manager of the Albion VCTs, and also the current Chair of the Venture Capital Trust Association. Maria Wagner, Partner at Beringea, Manager of the ProVen VCTs, and Jamie Roberts, Partner at YFM Equity Partners, Manager of the British Smaller Company VCTs. Welcome, everyone. I'll start off with Will. So it's been a great year for VCT fundraising. Why are VCTs so popular?
I think there are several reasons, but if we sort of break it down, I think part of it will be a hangover from the various lockdowns and the pandemic. There was a reduction in the amount of capital put into VCTs during that hiatus that you'll remember well, when the very early days of the pandemic, before people knew what were going, stock markets were falling. So there's a little bit of catch up going on, I would say, is part of it. But I think the bigger reasons for it, I think, are that there's been some decent performance from the VC sector. So I think people are becoming more comfortable with the VCTs as an asset class. And I'd like to believe that, and certainly talking to many of our shareholders, there's a real interest in what VCTs do backing young, innovative growth companies in the UK.
Maria, would you add anything to that?
Well, I think the VCTs have been popular because of what's also going on in the public equity markets. There's obviously opportunities to diversify people's portfolios and go into different asset classes, and VCTs always represented a way for people to diversify their investments.
And Jamie?
So we've just done our latest shareholder survey, which again just resonates the big thing for our investors. They like the income, they like the returns, but they like those returns coming from small businesses in the UK doing interesting things. So that's the key thing. It's that emotive. We're supporting the businesses of tomorrow.
And what part does the tax relief play?
I think that definitely helps the returns. It helps them. They're not without risk. And I think that helps investors get comfortable with that downside. There's some downside protection.
And so there's a lot of money gone into VCTs. Are you all comfortable this can be deployed effectively? I'll start with you, Jamie.
Yeah, absolutely. So we've seen, I'm predominantly on the new investment side, and we've seen an uptick in the number of new inquiries we're getting this year versus last year, and last year saw similar levels of growth. About half of the money that we invest now goes into our existing portfolio. The businesses are growing fast, they're hungry for cash, we're happy to support them. So I think there's a compounding effect, as we've all been investing in these high-tech businesses for a number of years now. The portfolios are hungry for cash and the new opportunities are continuing to come in. So yeah, I think the need will continue to increase.
And Maria, are you finding plenty of need, plenty of ways to put that money to work?
We are, and actually this is it's a great time for investment. The valuations have been quite high last year especially, and with valuations coming down, it's actually a great time to be investing. And the ProVen funds have been around for 20 years. We've been through a few recessions, and actually some of our best investments were made during the last recession. So yeah, we're still actively investing, and there's a lot of options out there.
So, Will, is it a landmark for VCTs? Are VCTs becoming mainstream? Are they, a really important way to fund businesses and an accepted way to fund businesses?
I think they're becoming a fundamental part of the funding ecosystem, and their importance is only going to be greater in the times we live in, the uncertainty that as a result of the war in Ukraine and the pending recession. What we saw in 2008, 2009 was a drying up of liquidity generally in the market and the availability of capital to younger companies. And that's where VCTs can really make a difference, because we have got a decent amount of permanent capital. There's about 6.5 billion invested across all the VCTs. And that capital is permanent. It can be long-term in its approach. And now is when it's going to come to the fore.
Maria, you've already touched on it. So, Jamie, now we've got war in Ukraine, we've got economic gloom. Is it time to run for the hills, or is it time to double down and invest in VCTs?
Yes, it's an interesting debate. So, I'd come back to the nows for us as investors. There's less heat in the market. So, I'm not sure we've seen that pricing come through straight away. But actually, the number of businesses looking for funding, they're not looking for funding today to sell tomorrow. They're looking for funding today and a funding partner that can go on that journey for 5, 7, 10, 15 years. So whilst we have a mind to what's coming next, we're not overly caught up on what might happen in 6 months' time, 12 months' time. It's about making sure they've got the runway, they've got the capital to do what they want to do, and that we as a partner can support them on that journey.
And Will, good time to invest?
Yeah, I mean, I really sort of re-emphasising my point. There is going to be a significant need for capital as a result of the world around us. That provides the opportunity, and certainly if you look at investment activity we're seeing in Albion, it is materially up this year on last, and that's often companies that are looking for funding to often fund extended business plans, because while growth will be slower, the huge benefit of what we can do is we can simply back this business. We can give them the time to develop. They remain good companies, and they will grow, providing they're properly funded.
So good time for investors rather than just the companies?
I think for both, because the opportunity is to, when we grow companies, we grow shareholder value. The two go hand in hand. The rate of growth will be slower. I think that'll be true in every asset class in this environment. But this is about investing in a long-term product. Minimum holding period for 5 years is the obvious point. But VCT is absolutely set up to provide that permanent capital and make the most of those opportunities that Jamie and Maria have talked about.
Maria, what are you hearing from your companies? Are they suffering from the downturn?
It depends. I think it depends a lot by company. I think the software-based ones and the B2B ones, we haven't seen a major impact, to be honest, yet. On the ones that have more consumer exposure, especially on high-end goods, some of them have seen impact, especially on costs of goods sold, if they have a lot of imports, and potentially energy exposure. So some of those have been impacted. So the priorities for us are to review their business plans, help them prioritize new initiatives, cut costs where necessary, or streamline operations to find more efficiencies. And if they need additional funding, review different options to provide that funding and ensure that they have at least 24 months of cash flow.
Jamie, would you say the same?
Yeah, so our portfolio is sort of 75% tech, data, analytics, sort of enterprise solutions. So they're not losing customers any faster. I definitely say there's the more forward-thinking ones, the ones perhaps putting in bigger solutions to their customers, are definitely feeling a little bit of moving to the right from the customers. Return on investment is a key thing customers are asking for now in our portfolio. That's become a real. We need to be able to show and one of the things we're talking to the portfolio companies about is sales is going to become more around take our product, because the repayment on the cost is going to be quicker than the pain of the cost. We have a little bit of retail, a little bit of consumer, and they're feeling it a bit tight. But I mean, you could maybe guess it probably might get worse for them. So similar, we're thinking about funding those through the cycle.
So when you're funding new companies today, what are you looking at? What are the sort of problems? How are you going about it?
Yeah, so still, and who knows how long this will last, is recruitment. So we are, every portfolio company we have and every potential portfolio company we meet is talking about the challenge of recruiting highly qualified people in the UK, not just in tech, not just in sales, but across the whole ecosystem of a business, is getting the right people and keeping them. So we're spending a lot of time, shared practice across our portfolio of which portfolio companies are really good at that culture piece, and how do we take that across to the other investments we've made.
And you've both faced the same problems?
Yeah, I mean, recruitment is always the biggest challenge, especially at the early stage, where the founders are learning how to shift from being entrepreneurs to being managers and how to delegate and manage. I think the other challenges are, as the company scales, to improve processes, structures, and culture, so that you're able to continue to grow as fast as you were before without losing some of the more intangibles that you had as a smaller company.
I think the other big area where we focus a lot on is go-to-market strategy. So what is their approach to actually selling their product or service? So we help them put in the appropriate sales structures, processes, the rigor, and also looking at what is their strategy, what is the best way to go to their market. Is it a direct sale? Is it through distributors? Is it partnerships? Because actually that's where one small company can outperform another, because they're that much more sophisticated in their go-to-market strategy.
If they didn't have VCTs, would these companies just get backing anyway? You've got all these venture funds around, and you hear about all these sort of high-profile unicorns, etc., which haven't necessarily had VCT money.
Mm-hmm. So, so we can't answer that definitively. What we do know is we see lots of businesses that come to us that aren't VCT qualifying. There's rules that companies have to meet for us to invest, and often when we say we can't help, they'll be back asking in a few months' time to ask us to have another look, which suggests to me that there isn't an abundance of funding out there. There are VC funds, there's lots of them in London. I think if you look at how many of them are outside of London, that might be more of a challenge. Our portfolio, 8 of the top 10 investments we have are outside of London, sort of all the way up to the north. So maybe in London there's demand for non-VCT, but outside of London, I'm not sure how far those VCs go.
I think there's also, because of the evergreen nature of the VCTs, they attract a different type of company that perhaps needs a longer time to develop and grow, or has a different attitude to growth, more profitable growth, or more not necessarily growth at any costs, or maybe a lot of our companies are R&D heavy, for example, and that takes a while to generate revenues from. So there's certain types of companies that are quite difficult to fit within the traditional kind of 10-year term of a traditional venture capital company that needs to show returns very, very fast, and certain companies don't have that ability. So I think there are certain companies that wouldn't get funded if the VCTs weren't around. It's
not simply whether there's others that can invest. I think there's also the point that we actually facilitate other funding to come in. So because a VCT has invested, that often enables the company to bring other investors alongside, because without us, either they wouldn't have enough funding or have any funding at all, or not enough. So there's a sort of dual purpose of VCT monies in terms of meeting that funding requirement and what is effectively a funding gap.
And just turning to the investors, why should they stick with VCTs, Jamie?
I go back to the survey we do with our investors, which is forever telling us they like the returns. They like the fact that we're taking money off British investors and we're investing it in British businesses, and then those returns are getting recycled into more British businesses, and our returns are good. The majority of the VCT market is returning really good, strong returns. Maria?
Yeah, I think it comes back to the returns for them, and it's quite difficult to get access to investments in early stage companies through other means. So for them, our shareholders love to come to the shareholder day and hear all the success stories and hear from the entrepreneurs and feel that like they're part of that, of helping build the tech companies of tomorrow.
And Will?
Yeah, I mean, I think it's proven itself to be a good investment class. It's produces consistent, steady income. So the Albion funds, we target a 5% of the net asset value of the effectively 5% yield year in, year out. That's tax free. And why are we able to deliver that? Well, that's because the VCT is able to build up a broad base of companies which in any given year will generate returns, usually through exits, and that underpins a very attractive long-term tax-free income stream.
And the tax relief really is important, I think.
Tax relief is absolutely fundamental because it performs a very important role, and that is getting private investors comfortable with a class which by definition is at the high risk end of things. And without that tax relief, I don't believe VCTs will be able to raise money of any significance.
And indeed, all our own client surveys show exactly that.
Is that right? Yeah.
So, Will, Maria, and Jamie, thank you very much.